Well, it's 4 p.m. here in California, and we have people who are dialed in from several locations. So I'm not sure what time zone you're in, but hope this is not too inconvenient for you. Welcome to our Silicon Global online program, Ask a VC Anything. Today we have Jay of Samsung Ventures and TransLink Capital, and also DTCP. So we have a very experienced VC joining us here today who can take your questions, and we'd like you to submit them by chat, if you would please, and we'll be selecting the best ones and I'll be reading them out loud and then Jay will answer them. So really appreciate your time and joining us here today. We've got a really good group with this. So we're going to get started. I hope that everyone is signing on. I've put together some slides here that show Jay's highlights of his background. Actually, this doesn't do him justice, but I would say he's the best connector of Silicon Valley with Seoul and with Asia. So here you go, the best connector. And of course, if you don't know, South Korea has a very vibrant tech scene, so we'll be hearing more about that. He's also an investor in US startups that need a boost in Asia. And Jay was at Samsung Ventures for about 4 years, and he made a number of investments for Samsung Ventures, and then joined TransLink Capital to do some of the same work. We're working with a number of corporate investors, and we're going to hear more about that too. And he's recently become an advisor to a European group, DTCP, where he's going to be talking to them about growth in Asia, their new Seoul office and investments in Asia. And of course, his whole rationale for doing all this is he loves advising startups, he loves investing in new tech, he loves new ideas. He's got a great background, and we're really pleased that, Jay, you could join us today. Thank you so much.
Rebecca, thank you so much for this opportunity. And let me be the first to mention that there are plenty of great connectors, whether it's from Silicon Valley to Asia and even particularly to Korea. I would say that I've been doing it for probably a longer time, but as you know, just because you've been playing golf for a long time, it doesn't mean that you're any good. So I would respectfully defer any sort of, best connector kind of comments, but I do appreciate it.
Well, no, well, look, I give credit where credit is due. So I think it's really interesting, your career, you actually studied biochemistry. And then your first job was really an internship at Goldman Sachs, and then you were at McKinsey, and then you became an entrepreneur. I mean, how did you make all these transitions? What led you to become a VC?
Wow. So I haven't been asked that question in a long time, but it's funny. I think there was a couple of transitions for me. So the first transition was, growing up, I always thought I wanted to be a scientist and save the world and all that. Maybe that could have been helpful in this global pandemic situation. Sure. But quite frankly, I originally majored in chemistry in college and pursued a master's and PhD in biochemistry. And unfortunately, it took only about a semester in the lab doing research to realize that I just wasn't any good at being a scientist. I found the process of doing research and doing experimentation very lonely, and for me, it was just not a good fit. So the first transition I made was to move from science to business. I felt, meeting people, and I'd grown up in a family where my dad was an international business person, traveling all over, working for a big trading company. Thought I might have better attributes for that. So I was fortunate to find an opportunity where management consulting had just entered South Korea. McKinsey had just opened their office in Seoul in '93. And in '94, I was one of the first, in fact, the first batch of business analysts that they hired into the Seoul office originally. And so that's how I ended up getting the business training, worked in Seoul and then transferred to Beijing, worked in New York before coming out to the Bay Area for business school back in '97. And so during business school from 97 to 99, that was my second transition. I was originally interested in biotech because of my background. But as you may recall, Rebecca, and maybe some of the folks in the audience do as well, you know, the period between 97 and 99 was kind of leading up to the height of the dot-com bubble. And my entire class, classmates of business school classmates were either starting companies or joining startups. And naturally, I got sucked into it. And I was trying to figure out what I wanted to do when I grew up. And I had done some, you know, startup work with some of the classmates. I had done some big company projects during business school. I had done banking and consulting, and just I enjoyed different elements of that. But when I was fortunate to find an internship opportunity in a venture capital firm post-graduation, and this was my first venture capital job at Vertex, it was so much fun for me. This was the summer of 99. They figured that a lot of VC firms were hiring at freshly minted MBAs because, you know, they just couldn't figure out these dot-com business plans, and figured that these MBAs might actually know something that they didn't. So I was very fortunate to get that opportunity. And in a short 3-month period, I worked on a couple of investments, and I knew that was it. It was so much fun working with entrepreneurs, and you know, different elements I joined about consulting, kind of being helpful and advisor to the entrepreneurs, the, you know, thrill of trying to get a deal done in a transaction, which, you know, I enjoyed at banking, and getting, you know, operationally involved in certain cases, which I enjoyed working with startups. You know, all of those I was able to do. So, you know, that's really the transition. And, you know, that's why I guess I've been enjoying it for the past 20 years.
Right. I do remember that period of 1999. That's when I first started coming to Silicon Valley as a journalist and covering the tech boom for Red Herring magazine. Back then, the industry.
Oh, I remember Red Herring well. Yeah, I remember Alex. And
pages on the magazine. We had 100 editorial people. It was amazing.
You know what, Rebecca, that reminds me, one of the first projects I did in business school for a VC firm at the time was to actually go to the Red Herring issues and basically log in all the different companies that were covered in the Red Herring magazine into an Excel spreadsheet as a database, so that this VC firm could go out for deal sourcing. So I have fond memories about that.
Well, I was editing their international deal flow section. So even then I was covering Asia and Europe and recording all these deals that were happening. And there was a separate Asia deal flow newsletter. There was a separate European deal flow newsletter. So I was in charge of those, getting those out every day. There were so many deals every day. So anyhow, the whole period, it was too short. It was over quickly in 2 years' time. But Jay, you jumped off, and you since went on to 20 years as a VC. And what do you enjoy
it's kind of
most
scary,
about
but I guess.
Yeah, what do you enjoy most about that?
You know what? And I think most VCs would agree. It's really the day in and day out working with entrepreneurs. And, you know, I'm sure a lot of folks on the call will agree. You know, entrepreneurs are, I think, an interesting breed of people. They are, you know, for the most part, very capable, hardworking, very determined and driven. And you also kind of have to be a little bit crazy to start company, because, you know, if you do the math, I think the expected value or expected outcome for all the time and effort you put into is typically not a good ROI, especially for those folks that are capable enough to find, you know, high-paying corporate executive or service-oriented jobs. And, you know, driving off that, you know, energy and drive is just contagious. So that's really the best part. I enjoy it.
That's why I like writing about entrepreneurs and being around them and interviewing them, because I do feed off the energy as well.
Yeah. So I think you'll relate. But anybody, I think, for the most part, that works in this community would realize that, you know, that's the best part about the job is, you know, the day in and day out and working with entrepreneurs.
Well, what excites you most about the technologies that you're seeing coming forward today?
You know what? So just having been around the block for a while, you know, I've had the, you know, for better or for worse, the experience of seeing a lot of these technology waves, right? So, when I entered the industry, in 99, the whole dot-com bubble and that wave happened. And, subsequent to that, there was a massive infrastructure development wave with, I'm sure you remember, the telecom infrastructure build out, the optical network build out. So that was a massive investment area. And then subsequently beyond that, mobile infrastructure and then mobile ecosystem apps, that became a big thing. And it kind of came in waves, but I think what I find most interesting in the past 5 to 10 years or so is that now these waves are happening more frequently and
Yeah.
multiple waves are happening concurrently as well. So, especially, the areas that I'm most excited about, which is what people would label either frontier tech or deep tech. And these are areas like AI or, robotics, drone technology, automation, big data analytics, AR, VR, both consumer and enterprise applications, all the way to the past few years of blockchain. It seems like there's more waves and it's multifaceted and they're happening, concurrently sometimes. And so it's exciting. It keeps you busy. It keeps you on your toes. And because of our role and what we try to do when I was at TransLink and still do is to try to kind of look ahead of the curve and see what would impact, the industries. And so while there's, obviously incremental innovation happening within each industry sector, and a lot of the corporates are looking to fill technology gaps, product gaps by working with startups. If you think about, for example, an emerging technology area like AI, I mean, AI cuts across every single industry. AI cuts across every single function within a corporation. And so those impacts are things that are completely disruptive. And so you want to make sure you're ahead of the curve. You understand the implications. You understand who would be the best partners to work with so that you stay ahead of the curve. Because if not, then you'll get in trouble. Your business model or your business itself could become obsolete. And for other folks, they could take advantage of these opportunities to, robotics and automation. What can they do to increase competitiveness over, your competition? Is this an opportunity, right? Are there new business models to get into? So all of that, I think, makes it even more exciting now than ever.
Well, how is your investing style changing as a result of the coronavirus? What do you see coming up that's going to be, the next wave?
Yeah, no, I think that's a really interesting question. I think people are already seeing it. There is a tremendous amount of attention now going into dealing with global pandemics, right? And if you think about kind of the entire biomedical healthcare industry, starting from prevention and vaccine development and drug discovery and treatment, all the way to healthcare and how can we better efficiently manage, the situation where it's been very clear globally that the entire medical system has been put on a tremendous amount of pressure. It's been, stress tested, so to speak, and frankly, it has failed in many countries, right? And I think it's no secret to anybody that's familiar with the healthcare industry that there are still a lot of inefficiencies there. And even before you get to that healthcare system, are there ways to, better deal with, a global pandemic? Are there ways to deal with, prevention and viruses and just general, common sense and scientific driven approaches to prevent the spread? And as we all know, there's been some countries that have done better and fared better with that, and other countries have not. And I think there's going to be a lot of learning that happens. And the great news is I think the entrepreneurial community is jumping at this chance, because if you think about it, the definition of an entrepreneur is in many ways a problem solver, right? And oh, that looks good, Rebecca. I might join you. I have a no.
It's not quite yet. I have that. I have that too.
No, it's great.
Everyone would be doing a toast at the end of the show, so
yeah. And
but we're not quite there.
I will say, I will say that because of that, I see a lot of, very capable entrepreneurs and investors and advisors and scientists and public sector folks that are jumping on this opportunity to try to fix it, so that there's a lot of lessons learned. We're paying the price right now, but hopefully next time around we'll deal with it much better. So I'm excited about that biomedical side. I'm also excited about particular tech areas that, as we know with this whole shelter in home situation, I do think it'll accelerate a few things. One of the areas that I'm personally very bullish about is robotics and automation, right? And, there's already plenty of examples, and people may have seen videos of last mile delivery using kind of, automated delivery robots, that are four-wheelers or six-wheelers. There's even automated warehousing and automated grocery stores now that will do the online ordering, the picking, packing, depending on the order. And it's basically this massive automated warehouse that will do the picking per order and then deliver it automatically from that warehouse / grocery store. And I think the trend towards that acceleration is real. There's certain things that even in the medical profession that, because it's frankly dangerous, right? That it may be better served to have a robot do certain things like cleaning up after, a patient leaves a room that, had a serious infection. There's ways that I think this pandemic, while it's unfortunate, will actually accelerate the development in certain healthcare and technology areas for sure.
Yeah, no, I agree. And which markets do you think are going to be leading that?
That's a good question. I think that a lot of acceleration of both, whether it's COVID test kits, right, or even dealing with the actual testing procedure and service, dealing with the medical side where making sure that sanitization and whatnot. I mean, I'm familiar with what's going on in Asia, in countries like South Korea, Hong Kong, Singapore, China, Japan, etc., Taiwan. And because in certain ways their medical systems have been developed more recently relative to the Western world, both the US and Europe, they've had the benefit of better infrastructure, right? It's somewhat similar to how their, for example, broadband or wireless infrastructure is, because they have had to build it with newer technology more recently. And my experience in kind of a medical facility in Korea is just far more advanced with better service, better technology in many ways than what I've seen here in the US, to be very blunt. And I think there will be a trend that continues that. I do think that in terms of automation and robotics and warehousing and whatnot, a lot of that is still going to be led by the US. The US still has a reason that the massive infrastructure is more efficient with automation, right? And labor costs are typically higher, so you have a better ROI argument. And a lot of the fundamental technology related to robots, including sensor technology, including computer vision, voice recognition, even accentuation, is all led by the US. So I still believe that the US will lead in that area, as already been developed by, demonstrated by, the automatic warehouses and robot-driven warehouses that Amazon has. So I think it'll be a little bit different on each side of those industries.
Yeah, well, speaking about the contrast between Asia and the US on technology development, on the COVID-19 situation, it seemed that many of the Asian countries, certainly South Korea, handled it very well. So why were they able to handle this so well, where the US has been rather stumbling along, it seems, in comparison?
Well, to be honest, I think it's a simple reason. And, to summarize in one word, it's practice. So the Asian countries have already dealt with similar, virus and pandemic situations with the original SARS, and then they also had something called MERS, the Middle Eastern Respiratory Syndrome, and that was a big scare to the system. In fact, one of the reasons that South Korea dealt so quickly and well with the whole coronavirus situation is, the MERS situation forced the Korean authorities to really look hard at their quarantine procedures, to look hard at their vaccination, testing, and even those tracking systems that we're talking about. Those were all actually developed, a number of years ago when the MERS crisis happened. They even had to change the privacy laws, which are very stringent. I would say they're European standard stringent in Korea, personal privacy, data privacy. They repealed that because for the greater good, it became very important that they should be able to track individual location and movement. And they had done all of that ahead of time. So they actually had some practice a number of years ago. And I would say because of that, they were much better prepared than anybody in the Western world, especially here in the US. I do think that part of the issue in the US was, I think there was really, a denial period that because it had never happened before to this scale, for the past, century since the Spanish flu in 1917. So nobody was really expecting this to happen. And so I think, the South Korean authorities and the healthcare facilities had done a fantastic job. And, they deserve a lot of credit. But to be fair to the US, they did get some practice ahead of time. And here we had never seen anything like this.
Let's see. Yes, well, it was an amazing image to see that South Korean airline flying in with all those masks on it.
Yeah, well, test kits, right? And, that's the other thing. They actually had, a half a dozen, biotech companies, almost immediately start producing, and they cut through the bureaucratic red tape. And that's what we're going through right now in the US. So I have no doubt that the US will get there and catch up soon. It's just that, again, in all fairness, I just, without expecting this to happen, without any practice whatsoever, it is harder to deal with. And, for better or for worse, a lot of the Asian countries had some practice with this.
And South Korea has a very vibrant tech and startup scene. And so I think that played a part in it as well. Don't you think so?
I think you're right. So it's interesting. So when the time I left Korea and came out to the US, we talked about that period 97, 99. Well, something dramatic happened in Korea and certain parts of Asia. That was the Asian financial crisis. Rebecca, if you remember that, right?
I do.
Yeah, and so Korea, alongside with a handful of other Asian countries, effectively had to default, and their currency was devalued. I remember because I was in business school and I had my tuition saved up in Korean won, and overnight that was devalued by half, and I ended up barely graduating. And I thank the business school, but there was an emergency fund for students that had hit financial hardship. So myself and a handful of other classmates from, other countries, Thailand, Indonesia, and whatnot. That's how we were able to graduate. But I think what happened during that time, with the whole Asian financial crisis hitting and whatnot, that really shook the belief that, as you know, Korea had been so dependent on these massive chaebol companies. Right. And I think the top 20 largest companies in Korea accounted for over 70% of the GDP. And Samsung alone accounted for almost 20% or something like that. And that was the first time where, because of the financial crisis, several of the top 20 companies actually failed and disappeared. And alongside with the whole realization that if the country was too dependent on these massive companies that were big and lumbering and weren't able to adapt and adjust too quickly, that would be a big problem. So the next government to their credit, really pushed an initiative to try to, kickstart the startup ecosystem, right? With a lot of government funding going into that. And as a result, during that first generation and first wave, I mean, the biggest internet companies in Korea, like Naver, and the big gaming companies like NCSoft and Nexon and others during that period. And they led the groundwork for the startups that many of the founders come out of those big companies that were very successful in that space. And then, of course, there's a legacy of, very successful industrial conglomerates like the tech conglomerates like Samsung, LG, and Hyundai. So there were entrepreneurs that are coming out of that as well. But it's only been, I would say, the last 20 or so years that the entrepreneurial ecosystem has really been started. And it's still early, but the good news is, there's a great number of, very capable and motivated entrepreneurs out of Korea. There are, I think about a dozen or so, unicorn startups in Korea that nowadays, even big funds here locally, like more recently, Kleiner Perkins or their spinoff growth fund Bond Capital invested in a fintech company in Korea called Toss, right, at a unicorn valuation. Sequoia, a number of years ago, they invested in a few companies. One of them was Coupang, which is now valued at a 10 billion value, and SoftBank invested after them. And the list goes on and on. Like there's food delivery. There was a big announcement where Delivery Hero announced a majority acquisition of Ua Brothers, which is the food delivery DoorDash leader in Korea, for a value of over 4 billion. And so these transactions are, starting to happen. And I also want to put a shout out for, there's Korean-born entrepreneurs that are successfully have started companies here in the US and are growing those companies very successfully. On the East Coast, there's the leading fitness app and AI-based fitness app company called Noom that's doing very, very well. Last year was led by Sequoia Capital, and they're off to the races. You might have seen some of their ads. Here on the West Coast, there's a startup called Zenbird, which is the leading messaging API company that's doing fantastically well, and soon to be a unicorn as well. And so I'm very excited about that entire ecosystem and the entrepreneurs that are coming out of it.
Yeah, and one of the questions that came in advance was about a company that is doing kids learning tools, and Kowico.
Kowico. You know what?
Kowico.
I may not be as familiar with this.
All right. Well,
but I'm not surprised. I mean, there's so many companies, to be frank, and me being here in the US, I just can't keep track of all of them. In fact, I was actually, so one of the best and most renowned VCs that used to be in Silicon Valley and now is in Korea, spending a lot of time and leading a lot of the best investments there is Altos Ventures, and I'm sure you know Han Kim.
Oh, yes.
I was actually doing a neighborhood walk just a couple of hours ago with him, and he was telling me about some of his latest portfolio companies, and just the momentum is really amazing. And so it's across the board from, whether it's e-commerce or food delivery or even B2B SaaS companies. There's, just a wide variety, marketplaces, platform companies, gaming companies naturally. And so, personally, I'm very excited about the prospects.
Well, maybe we'll have him on the show. Let him know. Let him know we're interested.
He has some time. He's stuck here in the U.S. like all of us, and so
right. Well, it's interesting that I'm walking around here in my neighborhood as well, and I often overhear people talking about deals and, oh, well, we were in on this Zoom meeting and we're talking about this term sheet and we're ready to close this deal, and I'm thinking, wow, this is Silicon Valley, all right, and it doesn't matter whether we're sheltered at home or not. It's very interesting on all these walks around the neighborhood. So what are you, just shifting gears a little bit, what are the challenges that you're seeing with your portfolio companies today? What do you think are their biggest issues, their biggest challenges?
Well, so, I left TransLink at the end of the last year. And so, I'm not as up to date with all my portfolio companies. I do reach out regularly and check in with them. So, this whole, pandemic situation is something that obviously nobody could have predicted. And nobody could have predicted the severity and the duration of this. And, once high flying companies, even Airbnb is trying to, get their footing back. And, for the most part, I do think because there is real impact to the economy and spending and behavior, that it's been challenging for most companies. I don't think there's any way to sugarcoat that. It's interesting that the companies that have been more, I would say, digital and online, those companies have taken this opportunity, and it's really become a boost. One of the companies that I'm very happy to be associated with, I led a round of investment, I think 4 years ago, is a company called Epic. And I caught up with the team at Epic about a week or so ago over Zoom, just to get an update, to check in. And what Epic does is they provide, they're the leading children's reading application. And so they have a massive library of high quality, top publisher quality children's books that are in digital format. And very similar to Netflix, you have a monthly subscription where it's all you can eat. And so, any parent that wants their kids to read more and spend probably less time, playing games or whatnot, it's a great application. And I heard that during this whole stay-at-home period of time where, parents are struggling to keep their kids entertained and at the same time educated, Epic has just really, just gone gangbusters. So, I do think that they're more the exception to the rule, and I was really happy to hear that. I do think a lot of companies have really had to, the companies that have acted early, it's very similar. The countries that acted early and took the hard measures early, even the states in the US that took the hard measures early, they're the ones that are doing better, right? The ones that took their time, wasn't sure, or were in denial, they're in trouble, right? Because the impact of, whether it's furloughing or laying off or cutting back expenses, it takes time for that impact to be felt. And if you don't make those bold moves earlier and deep enough, then it's not going to ultimately make a difference. So the companies and the entrepreneurs that frankly made the hardest decisions are doing far better than the ones that did not. And, I do think that the reality is a lot of the startup companies have been already affected. I think it's going to get worse before it gets better. And so it's challenging times. And while, theoretically, it's a great time to invest in new companies, right? So, those valuations are going to be more realistic. There's, good companies looking for capital and maybe, interested in opening up the last round of financing done over a year ago. The reality is a lot of the VC firms out there that have been investing for years, they have their portfolio, right? And they go through their triage, and most of them need to reallocate the reserves that they need to put in. And so in certain cases, in fact, in many cases, I think a lot of the new investment capital may have to be converted into reserves to basically provide life support for some of those portfolio companies. And so in theory, while it's a great time to invest, I think the reality is, having lived through a couple of cycles, the dot-com and the 08-09 financial crisis, I do think actually it's going to be harder to raise new capital, just because VCs are going to be predominantly focused on their own portfolio companies for the most part. Now, don't get me wrong, there's new deals that are getting funded and whatnot. But frankly, I think the bar is going to be higher for everybody.
Well, what advice do you have for entrepreneurs who are facing this situation?
Yeah, no, I mean, I don't think, I have any brilliant insights above and beyond what's really obvious.
Hmm.
As I mentioned earlier, I think at this point in time where, I think there's no secret, it's globally well recognized that we're in a financial crisis. If you haven't made the hard decisions and the cuts that you'd need to make to manage the burn, reduce the cost, a month ago, 2 months ago, then it's already too late, right? And so there's two elements of that. One is you need to get your house in order before you can actually look for fundraising. Because one
Yes.
of the first questions people are going to ask, well, the two things. One is it's going to take longer than normal in this environment to raise capital. So you need to extend your runway longer. That's number one.
Mhm.
Number two, because it's going to be that much harder to raise capital, you need to show that you've done the responsible things, that you've managed your burn, and that while maybe your current traction and revenue may be impacted, you're doing all the necessary things that when the tide turns and businesses open up and whatnot, you are better positioned than your competition to take advantage of that. And I think the better entrepreneurs are realizing that in certain cases, this is an existential event, that it doesn't matter what the valuation is. It matters less about dilution. It is all about, can you raise the cash to survive, to get to that next milestone? And the good news is, I mean, obviously, business will come back to some normal. It's not going to be the same normal, but it will be some normal, as we're seeing in Asia already, right? It's just a matter of time. So the question is, as a good entrepreneur, can you find a way to survive for the next 6 months, right? And on the other end of that 6 month period, things should look better. And it's almost like a trial or a test to show the ability to your existing investors as well as a new investor that we have made the hard decisions, we have done the cutbacks necessary to survive, and the folks that have done that will get credit for it.
What about government handouts? Some of these SBA loans, some of the grants that are
Hey,
in the
again,
works?
if you're qualified and the government is writing checks, absolutely. Again, as an entrepreneur, you are looking at any and every avenue to be able to extend runway. And in addition to cutting costs, if there's government loans and whatnot that you qualify for. I mean, the fact is, a lot of the entrepreneurs that I know are already tapping into that, or at least trying to tap into that. It's been, from what I hear, a little bit frustrating because of the guidelines not being clear and whatnot. But again, if you're an entrepreneur, and I know this for a lot of the entrepreneurs that I know, they're already working on that. And so you're just, you're just not leaving any stone unturned.
It's also slow because our technology system is outdated. Our government technology systems are
Yeah.
way outdated.
And again, I'm not here to, be too negative. Again, in all fairness, the US systems were set up earlier than most, right? And so, it just takes longer and whatnot to do these things. I do think also
No
the digital.
excuse though. We're supposed to be the leaders, and here we are. We're not
Well,
the
yeah,
leaders.
yeah, and again, I do hope that this is, a very timely, warning signal, and it'll act as a call to action for a lot of improvements across the board. So, we'll see what happens in the next few years.
Yeah, right. Well, here in California, I was hearing Governor Newsom talk about some new technologies that they're bringing into their system to try to ease the backlog of people applying for help, financial help. So we'll see. Well, you're in a very good position now of leaving TransLink Capital and then going out on your own. And tell us about that. Are you going to be raising a new fund? And if so, what are you going to be investing in? And
Yeah, no, I
tell us
think
more.
I think I'm working on a new fund idea. I don't think it's any secret that this is probably the worst time in, history, in my history in the past 20 years to try to raise a new fund. So, it's very hard to raise capital when you're not able to meet people. And, there's something to be said about, connecting over Zoom and whatnot. But when you're trying to raise capital and you're selling yourself and a story and a concept to potential investors, it's actually not hard to do that. It's actually not easy to do that over video. So that's taking time, but I'm excited about this project that I'm working on. In the meantime, I'm keeping myself busy. As you mentioned, I'm an advisor to DTCP, which is based out of Europe with offices here in the US, Israel, and Seoul.
Deutsche Telekom Capital Partners. Deutsche
Yes, so
Telekom
it's Deutsche Telekom Capital Partners. So it has a strong legacy back to Deutsche Telekom, of course. It's an institutional, financially oriented investor, but they also look for opportunities that they can connect back to the mothership as well. The head of venture capital, a very close friend of mine, ex-Qualcomm Ventures, asked me to help out. And so I'm more than happy to help out with, their Asian expansion strategy, especially in Korea, looking for deal flow and opportunities to invest there. And then very excited to work with a very close friend of mine, which is a fund out of Korea called TBT Partners. This is a relatively new venture fund, but the two co-CEOs, very experienced product executive, very experienced business development executive, and probably one of the most connected folks in the Korean startup ecosystem. I'm happy to help them look for deal flow here in the US, look at deals here together in Korea. And I'm also advising a couple of other funds as well and actively angel investing. So, surprisingly, it's been pretty busy. And, I'm eager to, hopefully get out back to Korea where I do want to pick up the dialogue on a lot of fronts. So hopefully in the next few weeks, things will look better.
Yeah, I'm busier than ever now. Staying at home has made me busier than ever, not traveling like I usually do to many hot spots.
Right.
Well, so anyhow, it's supposed to be a good time to invest. So it seems that you'll be in a very good position going forward to invest in some new companies. And
yeah, no, I'm excited about it. And it's a good time, to look at opportunities and, hopefully I think there's going to be a little bit more of a normalization on valuation expectations. But, we all know this. Some of the best companies get started in, tough environments. And, those companies are out there right now. So excited to get a chance to meet them.
right. How long do you expect this period to last, this particular cycle?
Wow. That one's hard to say. I think, as I said before, just drawing lessons from what's going on in Asia. I think, in the case of South Korea, and I remember this vividly, I was actually on a business trip in Korea. And the day that I was coming back to San Francisco, that's when I think the number of reported COVID cases jumped from less than 20 to over 200 in a single day.
What day was that?
I'm sorry?
What day was that?
Oh, I remember that date. That was actually Valentine's Day, February 14th. And I was on a flight back home to get home for Valentine's. So that happened, and now fast forward 2 months. Korea has announced that they're getting back to work with restrictions. So everybody needs to wear a mask to get into the building. Everybody's wearing masks for meetings and whatnot. And, facilities, you're supposed to, kind of sit, with an empty seat in between or face, not face the same way. And there's a lot of different restrictions, but they're back to work. So that's why I'm eager to get out there. So it's only taken a couple of months, but I would say that's the best case, right?
Couple of months. September.
Yeah. And I think the US being so large and being so diverse, right, because of the different states with each of the governors with the different policies, I do think it's going to take longer. I hope and pray that, hopefully towards the end of June, there will be some normalcy back. It's not going to be completely back to business as usual, but I do hope that business will resume. And then, I think a lot of it is also going to depend on the developments in vaccines and whatnot that are in hyperactive mode right now, to see if we can prevent effectively the second and the third wave, which a lot of people are expecting. I mean, there's cases in Korea that, people that were tested negative, were eventually tested positive again after a number of weeks. And that's actually a scary thought, to assume that you are fully recovered, tested negative, but if you can turn positive again, whether it's a reactivation of the virus or whatnot, then this might be with us for a long time.
Yeah. Well, speaking of flights coming in, I remember coming in from Hong Kong on January 16. And back then, this was not in the news at all. And
Right.
a week later, it exploded in the news. And here, you remember these dates very well. Yeah. Unfortunately, things like 9/11 too, like when I was in New York.
So
for that.
Rebecca, should we, I see some questions that have come in. I don't know if we want to go there now.
Well, I've been picking and choosing some of them as we go along, but
Okay.
one of them I like that came in anonymously is from asking you about, since you have had so much corporate venture experience, you worked with Korean, you worked with the US side, what advice do you have for US companies trying to get into the Asian market? And which market should they go into first?
Yeah, no, I think, so I think the important thing, and I've and Rebecca, this topic really well, and you've wrote about it. I've written articles about this as well. I mean, the first thing is, it's just not one Asia, right? And so it's really difficult to define Asia as a single market. We all know that's not the case. And for me, I think the most important thing, there's a lot of different elements, but the most important thing for me that I've seen throughout my career trying to assist US-based startups to expand into Asia is the right timing. And what I mean by timing is the startup themselves have to be ready to work with, let's say, an Asian customer or partner like a Samsung, or a Foxconn or an Alibaba. I mean, these are massive, massive companies, right? And, while the intent and interest could be there, to actually get something commercially done, even in the US, between a startup company and a big company is hard. And then you exacerbate that dramatically with adding the language, cultural, time zone differences. It becomes a lot harder. And so the realization that any startup needs to have before they engage with any big company, especially any company that's overseas and especially in Asia, is they need to be ready for that. And what I mean by that is, engaging too early is just not going to help, meaning they need to understand that in order to really get the attention and get the commitment and engagement for an Asian partner or customer, they typically want to see at least a proof of concept, or ideally even some reference customers in your home turf, before they will take you seriously, before there is credibility. And while a lot of the big corporations from overseas, they have local staff here, which is their job to meet as many companies as they can and report back to headquarters. And so just because you've had a meeting and, let's just say I've worked with enough Asian corporations that I know of cases where the same company, Asian conglomerate, had more than half a dozen introductory meetings with the same startup company. But because they're so big, it's different parts of that organization, and it all sounds interesting, but nothing moves forward because, again, for the most part, the startup themselves are not ready to engage. And it could be a product readiness situation, or even if their product is ready, they may not have the resources, the business development resources and whatnot, to push things along because, again, these big companies like a Samsung and whatnot, they're talking to hundreds of companies, potential startup partner companies concurrently. And in order to move the dialogue, you almost have to be there pushing things along. And unless you have the resources and local staff to do that, then it's really difficult. Now, once in a while, you'll get lucky and the big company is all over you because what you're doing is so unique
Mhm.
and it's so urgent on their part. So that does happen, and those are great opportunities. And I've seen that happen where Samsung is chasing a startup because there's no best alternative. And
Oh, tell us about this, Samsung chasing the startup. We'd love to hear about that.
there's a lot of examples about that. But I mean, when a big company like Samsung, or any big company, in my opinion, it takes them time to decide on a direction. So let's say, a technology that would be featured in a handset, the next generation flagship handset of Samsung. Well, they're going to look at, hundreds and hundreds of different opportunities and options to consider from, and even from that special feature, and whether it's, voice recognition technology or fingerprinting ID technology, whatever it is, there are typically more than a dozen different companies that are working on similar solutions. So if you're Samsung, you're going through and meeting all these companies, evaluating them, and to try to narrow down who you want to work with.
Mhm.
This whole process takes time, months, sometimes well over a year, right? But as soon as they decide that they want to work with you, then the dynamic flips, and there is so much pressure where Samsung is pushing you to produce millions of units because that's the only way these things get done, right? And so at that point, you're drinking from a fire hose and trying to stay afloat. And so I've seen that in my experience in many cases where as soon as you get to that point, then it's a reverse dynamic, and it's quite interesting to watch. And for the few startups that can deal with that and can ride the wave together, they've become very, very successful. I've had the pleasure of investing in companies that have done that very well in terms of applications. Um,
Well, give us an example.
yeah, so there's a company that I led an investment when I was still at Samsung. Well, actually, no, I led the investment after I left Samsung at TransLink, but it's a very simple consumer application. The name is Peel. And what it does is it enables you to control your TV through your mobile app. And so there was a number of series, Samsung Galaxy S flagship smartphones that actually had an infrared feature embedded in the phone. So effectively,
Mhm.
your smartphone acted as a remote control. And because it was already programmed into the app, instead of you trying to figure out and find the remote control, flipping through channels to the program you wanted to see, all you needed to do was to turn on the TV through the app and click on the content that you wanted to see instead of worrying about the channel, right? And that's what we're all used to by now with the Hulu and Netflix experiences. And because they were preloaded and embedded into the Samsung flagship phones, they had hundreds of millions of units and downloads. And so they rode that wave. And even though Samsung has now pulled that particular infrared feature off their handsets, the company is still doing very well with that. And another example of the voice AI company and music recognition company SoundHound, which I invested at TransLink 12 years ago. They had the early bump because they were preloaded in every single HTC handset at the time. And their initial music recognition application, SoundHound, was downloaded more than 300 million times. So, if you can ride that wave, it's a lot harder these days, but it's a company transforming event. Not easy though.
Oh, yeah, it sounds very challenging. Like Zoom has been facing, dealing with the incredible surge in volume of people going online and
Yeah.
having these kinds of meetings and webinars. So, how does a startup evaluate whether to go pursue corporate venture capital investing or go the more traditional Sandhill Road VC route? What are the factors that they should look at in evaluating that if they have a choice?
Yeah. I think that obviously the best situation is when you have a choice for that, right?
Yeah.
I think the most important thing that I think people should understand is corporate venture capital has many flavors. It's just
Mhm.
not one size fits all. And there's a very broad spectrum of corporate venture activity where, there's certain firms that just focus on business development and don't even do investing. IBM, did some fund investing, but I don't think they're doing any direct investing in startups. But they have a very active business development activity to connect startups to the relevant IBM business units for partnerships. On the other hand, you have all the opposite end of the spectrum. You have some corporates that are literally, not strategic, and they'll tell you we're not strategic. And some of them have made it very clear and they changed their names. Like, SAP Ventures is now Sapphire Ventures past few years, right? And even our friends at Next 47, they're backed exclusively by Siemens, right? But they don't talk about Siemens up front. GV, Google Ventures, there's a reason that they're moving away. The good news is a lot of these evolved models, what they're trying to do, which I think is very, very smart and where corporate venture is heading to, is the realization that if you are a top tier VC, you will get access to top tier deal flow. And as a strategic, that's what you want. You want access to the best companies, right?
Best ideas of the future.
Exactly. And so if you are hindering yourself getting access to the best deal flow because it happens to have your corporate name on the door, which effectively have some entrepreneurs hesitate. And I face the same situation at Samsung. Some of the best companies that I was excited to invest in occasionally would not want to take money from Samsung because they were concerned, even though I explained we're not directly part of a business unit, we're an independent unit, but they were telling me quite frankly, well, you know what, I get that, I appreciate that, but I also want to work with customers like LG or Sony or Panasonic, and just the perception that I've taken money from Samsung may not fly well with them. And by the way, I don't need your money either because I'm well capitalized. And so by eliminating that barrier to the best deal flow, I think some of the corporates have evolved to that point where they realize that the insight that they get from working with the best companies, the connection that they can get to those companies is actually far more valuable than a potential, strategic benefit because, it's particularly tied to that corporate venture unit.
Right. Well, I've learned a lot today, Jay, and I'm sure the audience has too. So we really, really appreciate your time coming here today and giving us your lessons learned from years of experience. And we'd really like to thank you for being here and sharing all that knowledge. So I'd like to just say a few words in closing. I am also going to get my wine glass ready as well to do our traditional toast at the end.
Cheers.
But please, if you liked our series today, I hope that you'll come back and join us next week. We're going to have Jeff Chi of Vickers Venture coming in. That's May 7th, 4 p.m. Pacific time. And I hope that you'll also check out our mobile app, our videos, our Twitter feed, our weekly newsletter. We have a lot on our plate here at Silicon Dragon Ventures. Thank you so much for joining us. We look forward to seeing you again, and have a good evening or a good morning wherever you are. Bye now.
Thank you so much, Rebecca. Really appreciate the opportunity. And if you need a connection to Han to do this, this is great. I love the wine and the relaxing environment.
Oh, yeah, no, it's great. Thank you again. I'm going to click off.
Thank you so much. And thank you, everybody, for joining us. Appreciate it.
Yeah. All right. Bye-bye now.
All right. Bye-bye.